Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and I'm here with you today on Monday, the 22nd of January. 22nd, we're almost through the whole month already, and this time's just flying. Okay, so let's look at the NASDAQ on the daily. I drew this out last week about where I thought the rest of the week would go. As you can see, it hit perfectly in the middle there this morning, or since Sunday. We opened, and I was surprised we took it up a majority of the run up yesterday, or sorry, on Friday, and it was nice. I was happy to see that it took off there on Sunday, ran right up into my objective. And I'll tell you how I got that area later on in the show today. And where we go from here, that's the next question. That is the next question. So I'd like to see this create a fair value gap in here today. Just kind of have a small range day, then come back in tomorrow, trade back into that fair value gap, and then you got the various levels of a breakaway gap I'm looking for further upside. Or we're looking for the retracement. You remember the bubble era, right? When you get the run right up, you get a peak, and then it kind of drops back down, and then they get into that denial that we're about to make a major run down again. So when you make a high, you come back to almost making that new high again, and then you start to collapse. That's where the bubble breaks. Now, that's the question people are asking is, when is this bubble going to break? So, do we have a continuation to the upside further and further? If so, I have some ideas I'm going to share with you later on today. That's the daily, E-mini S&P's daily. I've been listening to some of my shows, and bless you guys for not saying anything, but there's those times where I have a postnasal drip problem in the back of my throat. So I'm constantly clearing my throat. So I've got some lemon water today to try and help out on that. I will hit the pause button, so you may hear moments where it'll go quiet. That's because I'm trying to clear my throat out of respect for not that just constant hacking and clearing my throat that I do. That could be really annoying. So thank you guys for putting up with that. Like, holy smokes. I was listening to one of my shows the other day. I'm like, oh man, goodness, that sounds terrible. Pause button, so I have to make sure that I don't have that bothering you guys. Good morning, Kirk. That's what I can always trust is Kirk's early morning. He's here every morning, right on the money. Thank you so much for turning up there, Kirk. So daily on the S&P, we finally broke that old high. So getting into this consolidation now. So we've taken out a low, come back, created this little interim swing low here, broke the high. So again, same kind of thing. I want to see a fair value gap form in here, and if we do come back and just tag the tops here again before leaving, and then we want to leave this open. So whatever little range we create here, look at 50% of that range or the top of this for discount. So we'll wait. We'll wait and see what happens today, see how this candle reacts. Do we have a big takeoff already, or do we just come back and tag this right off the bat and leave? Because now we've got a body above it. To me, that's more bullish, obviously. If we lose this candle's low or mean threshold, then we could be just having a revisit through the bottom, come back up, and then we have the potential for a reversal. But I don't see any reversal happening just yet. So let's keep our eye on, see how today and tomorrow open up on that one. Now we finally broke the Dow Jones has finally took out its high after that last week's idea of perhaps running down into the daily fair value gap that's down here. There was that potential to run all the way back down there, but all we did was just take out the lows, and then we have a break-in structure to the upside, more break-in structure, and it wasn't until we got above this high here that we started to find anything we could actually get in on. We didn't even get a return to here. There's no fair value gap in here. We do have an order block. We still don't get into it here. It's not until we break that high here and return back into it here, that little fair value gap that's created there. Do we even have an entry to go long on that? Yeah, from the hourly perspective. So let's look at that as an upside objective for today. In the next few hours, let's see what that. Yeah. Let's look at Dixie. What's Dixie up to today? Haven't quite retraced back to that daily fair value gap inversion here. We are dipping into this fair value gap here. Breaker ran through. We got a lot of inversions and that going on here now. Just get this out of the way. There's a whole bunch of stuff to look at right there. We have this fair value gap here filled. We have a weekly fair value gap, which is now an inversion. Gets a little darker. So we're looking for that to return to the top of this. We could dip all the way down into this imbalance here one more time, right back by the consequent encroachment of that inversion fair value gap on the weekly. Well, daily will bring us all the way down to here. Yeah, this could be a deeper run back into this weekly inversion, so we want to see if this actually provides a level of support or if we're going to dig down deeper into this. No, wouldn't that be interesting? Can you get a reaction off of this high here too? There's multiple different things you can look at here. This old high, inversion fair value gap, daily fair value gap. It's all sell side with a gap in it. This consequent encroachment will take care of this. Mean threshold takes care of the weekly open. We have an overlap. Okay, and we have another gap down here. So right now I think we've got a bigger draw on liquidity on the downside. Unless we get a big reaction off that high. Well, we're pretty much there. Not sure, I got more of a feel that we'll pop into here more. If we lose the midpoint of this order block here, the mean threshold on the upside, 25% of the wick, 50. It's not jumping out at me this morning. There's too many options for Dixie. Let's have a look at what the currencies have in store. Yeesh. Look at that. Just a oops. This is the one we want. Daily. That's just a lot of chop going on there. A lot of chop going on in pound. The hourly, you've got to run up, break structure, come back down to the consolidation, break structure, come back down to order block. And the discount, so you see how that's premium, discount, again back to discount, run back up above highs, come back down to a discount, mean threshold with the order block. See how we're running across there, the wicks pop through, but you know the bodies are respecting above. They're also in that inversion fair value gap right now. The bodies are respecting it. See how we're working the whole inside of that thing? You break above it, come back to the mean threshold, sorry, the consequent encroachment of that fair value gap, we're breaking above structure again. So if we come back down into order block, discount, back into here, or the top of this fair value gap one more time for a run up, or do we have this, that little order block right there? So if we extend this a little bit, you'll see it'll look a little more clear to you. This order block here is the last run below that low, so that's the breaker you want to see hold price. inside that fair value gap. I'd like to see a discount range. I'd like to see that get down into here, then run back up above the high. So I'll put a little line in here. I'll move this guy over so you can get a feel of where you want him to go. And then we have, so if you're looking for, okay, so see this inversion right here? Let's move this one over now. We have a body that closes. If this closes above it and we come back and tag it, look for continuation to this candle here. Yeah, look for the mean threshold of that candle. What's sitting in there? Oh, there's a smaller breaker in there somewhere. We'll have to look for that one. But look for, I think, more upside. If we come back down into this inversion here, look for further upside to here. Get back into that range. Look for this fair value gap inversion now to provide a level of support. If you lose it, look for it. And we want to start running back down here again. That's your key pivot point there. Euro. It's hanging right off the top of that fair value gap there. Order block. Mean threshold. Oh, we did break it here. Validates it. So I'll look for continuation on the upside there. You may get about one more tap down on the top of the fair value gap for a run back up into this side this time. There's lots of draw and liquidity up top. Lots of draw up there. Okay. I hope you all had a great weekend this weekend. It was my buddy's birthday. Happy birthday again, Tex. I think we call him Tex. His name is Metaxas, my Greek friend. And he's a whopping 58, just like me now. We grew up together as kids. We went to the same school together. When he came over from Greece, I came over from England. And we're friends ever since. Yeah, I don't see much in Euro, just that upside here. Hourly, you're sideways. They got equal lows here. You got equal highs. That's just sideways right now. Canadian dollar. If a body trades above that fair value gap now it becomes inversion. We've dipped all the way back inside it. When I draw this over, you'll see. See how that? We're right back to the bottom of it. Now we're reacting off. So if we get a draw back up, look for a run back up into higher prices. So that would coincide with higher prices on the Dixie. We're talking back here about, now that we've tagged this high, or if we do run down there one more time and tag that high, look for higher prices. Mean threshold of that order block, we need to see that hold. And then we'll look for higher objectives later. New Zealand dollar. We did not get the objectives I was looking for in New Zealand dollar. I was looking for it to run these highs out, but that's a high resistance liquidity run right there. So, makes sense now. You got these relatively equal lows down here. If the dollar does continue to do that little run up, then we can see these lows get taken. Again, we're sideways. It's just running out lows, highs, coming back into a small consolidation, just slightly taking out lows or highs. So, sideways in that one. Australian dollar. It's already run its lows. We still have two relatively equal lows down here. We've come back into validating this order block with a body. Come back. We've hit the top or the open. If this stays open and we start to run back up, look for mean threshold and or the consequent encroachment and the high of that SIBI. We also have an inversion over on this side, which is what we're bouncing off of right now. So you're really between this inversion inside this fair value gap and wanting to leave this one open. Mean threshold is your line in the sand for lower prices. And I like the fact that we ran that low out. So mean threshold is your line in the sand for trying to remain bullish. Japanese yen. We finally have, after all that time, have finally broken out. This is the weekly here. Let's go back to the daily. Look at all those days we're hanging around inside that inversion. That's craziness. So now we've got these equal highs up here. So if the US dollar continues to go up, which is what we're anticipating, look for these highs to get run out now. If we get a dip down into these relative equal highs here, fair value gap, first one fills, second one, you can take it all the way to the midpoint or consequent encroachment. You want that, the rest of that to stay open and then continue to the upside. Yeah, I like that one. And Robert, good morning. How you doing, buddy? Oh, Greece is beautiful. Santorini's really awesome. You can rent a little quad in Santorini. Me and my wife rented a quad there, and we ripped all around the island on a quad. It was great. And then we went to the place we found the best pizza in the world is on Santorini that we've had so far. I haven't had the pleasure of having a nice Italian pizza in Italy yet, but this place called The Hub in Greece, in Santorini, overlooks the ocean. The restaurant is right on top of the cliffs overlooking the ocean. Sunset, best place to take your girl. Best place. And it's one of those stone ovens. Oh, it's amazing. Absolutely amazing. And we drove back there a couple of times just to have the pizza. But you can go from one end of the island to the other end of the island all at one time, like within an hour or so. It's pretty small, but beautiful island. And the people there are pretty friendly too. And if you're young and you like to party, Mykonos. Mykonos, we were in a hostel there, 400 kids. There's a couple of oldies in there. But you got there's 400 people in this hostel, and you want to talk about laser light shows out in the ocean and like technical, like just going into the darkness of night, and there's big like bars that are open on the beach, and they're all playing their loudest music as loud as they can, and tons and tons of young people there. It's definitely a place for young people to go. So if you're young, you're single, or you've got a strong relationship and you can weather the copious amounts of people down there that are all fit and beautiful, that's the place to go. It's crazy fun there. Crude oil. Crude oil's doing the side-to-side motion, but I still get a feeling it was going to run up some more. I like the fact that we've eaten through this mean threshold a couple of times now on a wick side. No body's close above it yet, but I like the fact that we're digging into it. I still am looking for these lows that get taken out down here at 66.82. But we just might not get that. We might get a slow, steady climb up now into the highs here. Can't really call it. We're still off this order block. You're really between this guy here right now. We've come back to the open, and that candle's mean threshold. So that's pretty much where you're sitting. For oil, if we have run out these lows, we're finally starting to break the market structure to the upside, finding support off that little tiny order block inside there, and we've got another push above market structure here. So look for you're really on the hourly, you're between this candle here and this candle here as your extremes. Premium and discount, you're just over 50%. Fair value gap, you've almost filled it back to the open on Friday. Small little tight range, $1.50 separates your range to $2. Gold, we've come above this fair value gap, creating an inversion. We've come back close to it here. This is what we're talking about before. One of my rules of if we have a body breakthrough, we come back into it, on it, we closed on top of it, opened and then left, came back to revisit it one more time, and you get a further upside, break structure, then run out old highs, back to fair value gap, fill premium level, and we have a reversal, breaking structure to the downside, come back up into breaker, reacting off of that. Now we want to get through this inversion on this side and start seeking lower prices, especially if we expect the American dollar to continue up. Then we can see that gold has the potential for running down a little lower. We're right in the rejection block right now, and we're right back to the top of that inversion. So does it hold price or does it give way? We lose the consequent encroachment and then the low. So keep your eye on that. Silver's got the look at the daily on the silver. Silver's got a fair value gap down here to revisit, take out this low. We already have a break-in structure here. Inversion fair value gap. Look at that here. See that inversion right there? Well, watch how price runs through it with a body back to the mean threshold, sorry, the consequent encroachment, through back to the consequent encroachment. Bodies are now respecting that inversion fair value gap there. We come back, tag it one more time, finally break down. So that inversion was a classic example of how it provides support or resistance when you want to try and drive back up through it. You ran the lows through this fair value gap here. So now you got this guy, this inversion is created over here. So if we get below that, come back, rinse and repeat on this level right here. Look for lower prices in silver. Well, if you're into copper or anything like that, that mean threshold, that breaker holding really nicely. So breaker to breaker trading. Then if you're looking for a run up to a run down, look for this area over here. You're running out these lows here. If we consolidate, run down, run back up. As soon as it repeats to here, look for higher prices. Palladium, anybody playing with palladium? I don't really study palladium a lot, but I just put it on my charts just for some color, something on there. If somebody's interested in me talking about it, I can do a little analysis for you if you like. If you're into Canadian banks at all, they've got a nice little reaction starting to happen here now. So this is what I want to see, is this run. Now, as soon as we get above this high, I like to see this as a price leg, and then the next price leg up. So that's the potential for the next run up for banks to recover. It's that big leg, come back, we break the highs, that new leg is an extension up. So if you're looking for 107 to 130, so you're looking at another 20 some odd dollars up. So you're looking around 28 bucks, somewhere up here as an objective. Now some people are going, yeah, sure, how the hell do you know banks are going to go that high? The economy is so scary and blah, blah, blah. At least it's on my video here. That's my prediction of where I think prices could go. So if we're looking at banks, and I want to see this thing kind of hold price, at least it will give you here first for the uppermost reach. That's 158. Now if we pull that over here, that will run out these highs. Then if you see something like this, that's where the big crash occurs, let's say. And this can extend. Don't look at this as time, but just look at that as if that was a big drive up, and then we have that false run back up. That's the one you got to worry about. if we break that, if we create a low in here, we break it or turn back up into 50% of the leg that takes out a high. Like if this high here gets taken out with a leg, and that leg, you come back into 50% of the leg that takes this high out here, we could expect a big run down. And you look for a unicorn setup in here for the big crash if it happens. But what do I know? I'm just going to leave that on there just for shits and giggles. If I'm, over the next few months, we'll see what happens. But banks are starting to pick up a bit more now. And our Laurentian Bank, I'll just look at this in case Gary's watching. I know he likes Laurentian Bank. We got finally a break above order block. You want to see it get above here. I don't see that mean threshold get lost in that candle again. Citigroup, they're all starting to pick up. They've gapped up this week. TSX and all those guys are doing well. So, or the NASDAQ. All the indices are running for new highs, so profits are up. Everybody's a little happy. The economy's recovering a bit more, right? Now, whether or not you believe it's a false recovery, whether it's a pump and dump, I don't know. I'm not into fundamental stuff at all. And bless you guys who sit there and stick your heads in that beehive of information. I love just the pure technical stuff. We've broke all the way through corn here to the very bottom. Oh, that's nice to see. All my funds are taken off today. Love it. They're all recovering nicely. That guy's going good. Oh, it's Hamilton over there. RS, real estate. I want to see that get right up into there. Then I might get out of that. Good. All right, let's get back over here. Took out the high. Ooh. It's a nice reaction. The daily. So if I was going to give you that price leg, there's two different examples you can use here. One is wherever the high was, I think it was there. Take that leg there to there. That's where we can expect to run on the week for Friday, and it ran up just above it. Now, I did, in order to get this level here of where I thought it was going to go for the week, go to the weekly chart, take this price leg here to here, then run it from here to here, and that's where you get that precise price leg. So that's the box I drew. I wanted to put the middle right on the mark, and that's what we got. And that's how I made the prediction, because when you start breaking those highs, you go, okay, now how the hell do I know where it's going to go now? Well, I have to look for opportunities where price legs are forming to set new highs. So that's how I found that high. I took the projection from the swing low to the swing high, the run back or the retracement candle back into a logical level. It was a fair value gap. And the moment it breaks this high, you start to go, where's it going to go? Just extend that price leg from there all the way back up again. Take those two distances, and that's where I got the high, and we nailed it. Like, literally, it ends right there at 17,579, and the high here, look over here, is 17,585. So you're 6 handles above the prediction of where it was going to go. And it's nice when you see it actually come together or come to fruition like that. So anytime you break a new high, look for a price leg. And that's where you can extend it. Or if you're looking at a recent low that was taken out, you can do a price swing from there. The leg that takes out the lows, you can drop your fib tool and do a retracement on it and do a swing projection. That's another way of doing it. I do like looking for these price legs, higher time frame price legs. So now we want to see if this holds price. So you're really between here and here right now. We did break that low, and you see us whip all the way through it. So to me, it's starting to lose its luster already. It just ran up above the highs, cleaned them out. And now we want to see a return to here on the hourly. Return to this candle's low, or we could see one of these return to the midpoint, return to the low before finally breaking down. Excuse me for a second here. I'm going to try and desperately remember not to hack and cough in your ear because it's quite loud. And thank you for no one complaining, but I wouldn't have been insulted if you did. Hear me clearing my throat all the time. It can be really annoying. Okay, so we're sitting at 9. It's 9:45. So we got 15 minutes. Does it feel more down? We have a break in structure. We'll have to see what the 10 o'clock candle does. If the 10 o'clock runs those highs out one more time, yeah, I don't know. It's run the highs. It's hard to call this one right now because we have run the lows, run the highs, and you think, okay, so if we get a breakdown below and then return back into a fair value gap, we could continue getting shorter. But see how it ran all the way back up through the highs again, took the highs out one more time, came all the way back down. So now it's cleaned out all the liquidity above the market. It's cleaned out all this liquidity with market down here. All these people who want to go long, you pair them up with these guys up here, or you would have paired these guys up with those guys up there. Now you come back down and you clean these guys out. So are we running back up one more time? Or are we just coming back into this fair value gap here on the 15-minute? Hourly, we don't have anything. We have an inversion here, midpoint, We'll see how we react inside this area here, off this inversion. Do we find support at it, or do we get on top of it, start to run up a little higher again? What are your guys' thoughts? Anybody got any ideas, thoughts that you're looking at? Well, that E-mini S&P certainly taken off. Maybe that's our play today. Look at that. It came right back off that 15-minute fair value gap. Creating that fair value gap there. See how that little consolidation up there ran above it, broke the high, came back down, hit the order block, and then reacted off of it on the 15-minute. Broke above it, come back, tag the top of it, leave on the 1 minute. Let's see how this kicks off at 10 o'clock. I'd love to see it return to 38,108. That would be the open here. Session open. Mungo. Mung Beanie, that's an interesting name. Hey yo, hope you're well. Been meaning to check in. My thought, SMT on the lower, all have gone higher. Think bullish. Indeed, sir, indeed. If we can get a return to this old high here, and then get a continuation to the upside. Okay. Yeah, I guess we're just gonna wait for the 10 o'clock, see what I got here. We have this, oops, we had that line in there. What was that line in doing up there? That's the 1 hour. What was on the 1 minute? We're on that guy right now. And we're at a 53, so what have we got on the old economic calendar? Anybody looking at the Forex? I'm just looking at the Forex factor right now, looking for the news releases. Apply filters. So this is our economic calendar this week. Looks like Wednesday, the big day for Euro, GBP, and CAD. What are we expecting this week? 15th, Tuesday, Wednesday. Tuesday, Wednesday. So Wednesday. Okay. I don't see anything major in here other than the Bank of Canada rate. Could be the high or low of the week there for Canada. So not much today. It all seems to be kicking off in Japan stuff, so 4 more minutes. Let's see what happens here. We've run the high out already. Now, did we get a retracement? The contracts. Why are we in? I have one of these set for it's supposed to be just the 3 of them. 1, 2, 3. Should be this one. I don't know why it keeps flipping over on me, but we're supposed to just have 3 indices in here. This is supposed to be S&P. This is supposed to be the Dow. Get all this stuff off the charts. Daily, daily, daily. These are all making new highs. Yeah, I get the feeling these are going to be small. This could be a small range day. And tomorrow could be our dip down for the low of the week. And then the run up Tuesday, Wednesday. You're right, Robert. It is hard to read this morning. So we sit on the sidelines and wait for something good to happen here. So don't get in the charts too soon. Just wait till we see something of a. That's supposed to be the 1 minute. High, low, run back into 50% of this leg. Here's where my curiosity lies. So let me make this a little bigger. We took out the highs there. This could be a big retrace day here. Right there, you don't want to lose that. That right there is the potential short. We have that little piece up there still. Right off that point there, potential short. So I'm going to wait on that one though. Tech Miller, good morning, my friend. How are you? Here's 10 o'clock here, so if this candle holds and we get something off this fair value gap here, look for this low here. That might be the low right there, or the turn point there, just so you know that that's what I'm noting right now, is that price leg that takes out these highs. You take 50% of that, that's your line in the sand. There's an inversion sitting right in here. We're inside that inversion, right on a 50% of that leg. So some people could take short on that. So you want to see a fair value gap form here if you want to take out these lows. screen here. Look at all these screens when I'm not using them. Okay, I can put some more charts up here now. Okay, that's where I put it. So you can see how that 50% holds. It's telling you that's a short right there. You can see how that short's panning out. But once again, I want something that's a little clean. That is definitely an entry, at least to the rejection block. And you've got the rejection block here. And those of you who've been with me for a bit, you'll know that I love rejection blocks as a place to get out at. There's relative equal lows here. We also have at the bottom of the fair value gap, so downside look good. This little inversion here, we've busted through it, so if we get a return back up into here, this could be a silver bullet entry for a short, and you're looking for down here. And we've done our swing projection already. I don't want to see the low get taken out yet though. I want to see this form here. Stop in the next 16 seconds. Create a fair value gap there. Undo a small entry here. Now if we close a body above here, we've just bought or sold short in a discount portion of the range. After we've hit the rejection block, we could get a return to here. We're just taking this silver bullet entry here. It's on the demo. I'm not going live on any of this yet. We just returned to the order block breaker here. We broke that low, so we just returned to it. So you want to see it react off that now. We have a body that broke above. So we're between here and here right now. Get out. It's my rule. If I break a body above, and I did, it came back enough for me to get a piece, cut down some of my losses. And you know, that may be just off that breaker there and run all the way back down now, but I gotta stick to my rule of if I get a body that breaks the high of the inversion, then there's a chance that it's gonna continue on to the upside. So, and we were buying a discount to go shorter, so it naturally wants to return to a premium. So if it rolls over here and goes back down now, I'm okay with that still. I have to practice discipline on my rule of whether or not my rule gets broken. I have to stick with my rules. They seem to be more consistent for me than not, so I don't care if I take a little loss there. Now we're basically between these two candles. Mean threshold of that candle now been validated. Inversion here. And we're starting to get up into that premium portion of that range. Good morning, Sammy. How are you? He's done for the day. Oh, wow. Good for you. Rashab. Well done. Wow. $14 handles. That's pretty good. 8 lots. Yeah, that's dandy. Good for you, man. There's that mean threshold. Just sit here and stare at the charts. Off grid, good morning, sir. How are you? Sammy J. How are you doing? I'm a new trader trying to learn. Well, welcome, my friend. We will, I like to take, Sammy, welcome to our little breakfast club here. You'll see me trade. I like to read minute by minute what's going on with the charts. You can set your higher time frame objective for the day, but I like to run minute by minute to have a look at what ranges I'm in. So you see what the charts are doing minute by minute, and then once you get better at this stuff, you'll start to see more about what's going on the higher time frames. They'll become clearer for you in terms of directional bias if you study minute by minute. Now you're gonna have the patience to be able to sit inside the charts here, and you'll see a lot of people popping in and popping out, which is fine. Some people are just in here to find out what the bias is and move on. Trying to get a collection of all the people that are on the doing it live. What's the overall consensus of where we think it price is going? Stand by for a second. So you'll see I like to read it minute by minute. I'm a big inversion fair value gap guy. I like to find supported inversion fair value gaps. And I have a few entries. I don't have 80 entries like Michael does, but I've got a few. And you're welcome to come in here and ask questions anytime you like, my friend. We're all here trying to build a community of people that are caring, kind, that are just here to help each other out. Anybody trash talk somebody, they're gone. So we're not peacocking in here. You just see me took a trade. If you're here, you saw that trade I just took off of a silver, just purely from it was a silver bullet entry, so I took it. And then explained why in a discount I had a rule that if I break an inversion with a body, I'm out. So here's your reason now. It works. That was my reason, my rationale, and it pays off. You take a small loss versus waiting for it to come back up here and finally take out your full stop loss. That's my little hint that tells me that we potentially have more upside going if we lose the inversion. And it's not a Michael rule, it's just my rule that I've tried to mitigate some losses if I'm wrong. And then when we're in consolidations, I'm not a big fan of taking silver bullets inside consolidations. So, because everything's kicking off in Europe, and let's jump over to Forex for a second. Not that I'm going to tell you to. So the call I had this morning was running for higher prices. That order block up top there, and it looks like that's where we're headed. Fair value gap, run above an old high, you come back down to it with a body, you come back down inside the fair value gap. Remember when I was telling you when there's two in a row? One, full fill, take the second, and you're in a discount portion of that range. So just showing you what that looks like. You guys know all this stuff already anyway. We did not get the discount. We're just short of the 50 right there, but you got inside the 50 would have been like the perfect one. So if you're waiting for that, you didn't get it, you'd be miffed. That might be dealer spread right there, mucking around with you. Some other charts might have that as a full fill. So if you guys check your charts, see if there's a full fill of that, and if it's not, then they didn't want to let you get on. But it is a return to this little swing high here. You would have caught that mean threshold. You would have caught the mean threshold. Yeah, I would have waited for the 50%, right on the money there, taking it there, minus whatever your spread is. And then from there to there, you nibble a piece off at the next high, and then start aiming for a higher objective for your day, if that's where you're headed. We have now validated this one back to here, so you're still looking for more upside prices. So mean threshold and higher, this area right here would fill that fair value gap on the daily right there. So that would be the upside objective overall for the day if you could get it, but you scale out of these highs. Do you always use the swing low and high for the dealing range. Michael tends to use the body of the candles that started the run. Yeah, I use the whole swing point. That would get it past the consequent encroachment. Suppose use the swing low and high for the dealing range. Yeah, Michael likes to use the bodies, wicks of where he considers more of the manipulation. I like the swings. Because when you calculate the distance between, for example, let's use a and always defer to Michael's stuff over mine. If you use Michael's stuff and you're using the bodies, use the bodies. Defer to his stuff before you ever think about looking at mine. I always defer to the higher authority. For example, let's look at, let me just bring this one up here so you get an idea of what it is I'm trying to say here. If I'm looking at a specific range, if I'm pulling my fib tool from the high to the low, the retracement, let's say right here is 75%. We'll just look at this particular one here. Now if I pull from the body, (75% retracement). It's really not that much difference between the high and the low. So if you pull the body, you pull the wick, the majority of the time, this may be more precise, but I tend to look at the range. It's not much difference. Michael's is probably more precise. Oh, I see. What you're saying is it would get it past the 50% if you pull the body. Yeah, it would. That would get your 50%. Well, that brings, if you go to body, and you were tracing on that one right there, that would have put you right at 50%. See what I'm saying? There to there. That one brings you precision. And let me blow this one up bigger so you can see it. So we went from the body right there. So if we were pulling this swing point here to that high, and the retracement hit right on 50%, and it wasn't even a full fill. So you're right on that rate, in that range there, that would have pulled you right to 50% versus just short of 50%. Interesting. Excellent point there, Mungo. Excellent point. So looking for a liquidity above here, and that breaker that we were going to be hunting for. I don't see a breaker in here. It's a lot better. You don't have to listen to me clearing my throat every morning. I'm trying to remember that. See all those little blank sounds that you keep hearing? It's not your sound. Something wrong with your sound. It's the fact that I just keep going on mute so I can clear my throat. So you guys don't have to listen to me hacking all the time. See how this now becomes an inversion? We have a body trading above that high. And when we get a body trading above the high, and we dip back into it, right here, see that there? We ran right back into the open of it. And now we're climbing up above it again. So I look for this order block to provide support. Stop loss would go down here for upside. I wanted it to come down to here. It didn't hit it. So now you want to see right there. We'll see how that reacts. How about the body to the wicks? You mean the from the body to the wick here, or from the wick to the body there? %, puts the body right on there. If you go body to wick, wick to wick, it's 50% on that. See the difference? One is 62%, brings you right on there. One is 50%. Body's respecting the 50 or the 62. Difference between the two. See that? I guess you'd have to say what is consistently the thing you're using the most, that you find the most support for your trading style off of. As you can see, it works for me when I pull the whole thing. And if you're just pulling the bodies, see how, if it's just the body to body, see how you don't get the precision in terms of, yeah, you get the 62%, but you see how when we had what Mongo just said about body to wick, you get a 62% or a 50%, and the bodies, how the candles line up perfectly on those areas. So whatever, you know, I can't tell you what if your strategy is wrong or interpreting Michael's data is. You always try to take the information for what Michael delivers it at, and you want to keep it as pure as you can. But if you find something in there that works for you, and you modify it a little bit, remember any little modifications you do to the stuff that Michael gives you, you run the risk of distorting it, and it starts to not work. And then don't blame Michael if it doesn't work, because he may be thinking about 2 layers ahead of what you are, and you may find some detail and correctness in your modification of it, and then it falls apart later on, where Michael has found something that works, and later on it doesn't distort as much. I don't know. So take that with a grain of salt, I suppose. For now, I just stick with the high. I'm going to start thinking about the low now, of the body to body. Now that you've pointed that out to me there, Mongo, thank you. The last price leg, I checked, thought it might have got to 62%. Yeah, that one for sure. If you pull in the bodies, it made it to 62 for sure. And I think we had that at come on. Not quite 62% when you pull the wicks, you see? Pull the bodies. You got your 62 and you got your 70. This could be your silver bullet entry right here for long. There you go. Let's go long on that, just from a silver bullet perspective. It's very small. You can see there's like pennies on here. I'm risking 70 cents. No, I'm going to risk 46 cents. Let's see if this fair value gap holds here. Remember, this is just demoing this because we have nothing that's super clean. Today I'm just trading off of what? There's a fair value gap that formed here at 10 o'clock. There's a little tiny one right there. Stop loss would go down here, but I don't want it to get down there. I don't see you can get down below here. There's an inversion on this side here. And we have a down body candle right here with its high sitting right there. We'll see what happens with that. We'll come back to that one. New Zealand's still down. If we expect that American dollar to continue up, oil's heading up, or we expected it to. It's nice. We want to see that break through that mean threshold to the upside. I do like oil. Let's go to a 1 minute chart and see if we saw a silver bullet entry here on a 9:45. There's a 10 o'clock. No, there's a silver bullet right here at 10:10. I'm just going to drop a little wick down into that. That was the mean threshold line you saw there. I'm just moving it down here to see if we get a retracement back into that. Your stop loss would be down below here. We'll see if it's if it returns to that. See that 50% I was telling you about here? That was the 50% perfect entry. I gave you that one this morning. We're still in there for a short. Return to the mean threshold. So when I was going short here, my rule, as soon as we get that fair value gap broken to the upside, I should have waited for a premium inside that little range here, a premium, which was that order block. We talked about that order block running up to it, and then the continuation on the downside. So breaking structure below, you come back up into breaker, breaks this high, inside the breaker one more time, right here, draw it out, short, take the lows. That's working quite nicely. Our beloved NQ, yes. This is when you want to see it return to the bottom of that daily inversion. Come back up, find some support at it, and continue down. It would be nice to see it return all the way back up into a premium portion of this range inside here. Then you have a breaker inside of a fair value gap. That's a load up to go short. Oh, that's interesting. That's a good quote from Michael. I guess I shouldn't have been predicting where the new market was going to go. I got a quote here. It says, Michael states, I get asked a lot about how to trade markets in a new high territory. I know this might be a stretch of the imagination here, folks, but I don't know everything. When a market is at new highs, no one knows where it will go. You take buys until they fail. It will generally go further than you expected it to. And that is about all I have on the subject. Uncharted territories are new discoveries for me as they are for you. So, thank you for posting that. Rashab, thank you for posting that. So we'll put that down to luck then, that I called this high last week. And basically all I did for that is I took the range low from the wick, not the body, the wick to wick, and then when we get this swing pattern, I just said that looks like another price leg. As soon as we break this high, to me, and you'll see me pull price legs a lot of times, and sometimes I'll be wrong, but all I did was pull the range from the low to the high. And when we started a new one, I thought, if we're going to do an extension, we're doing another leg up, and we've broken a new high, and we don't know, we're uncharted territory. I just took that and extended it exactly to here. So that was my overall objective last week to this week, and we've hit it, and we're reacting off of it. That was my logic to it. Now, whether or not Michael sees that as logical or a lucky guess, I don't know, but that's how I predicted that. And you can't look at that as that's going to work 100% of the time. That's just how I came with that. So we'll call it lucky. If Michael doesn't have a fixed strategy for that, then we'll just call what I just did there lucky. I respect his thoughts on that way more than mine. But to me, that's no different than picking any price leg that you would have predicted. Had there been higher candles over here, that would have been a logical area for you to reach for. So it only makes sense to me that if it's not, and this is an all-time high for us, and there's nothing further to reach for back there, that you just can continue to extend the rule. If the algo is building a price leg up to a logical level you thought it would go to over here, why would it not make sense that it would do that in a range that is it's uncharted territory? That only makes, that's the only thing I can think of that would extend that, or doing one of those price leg swing projection things. And I didn't look for swing projection, I just took the price leg and extended it there. Anyway, so thank that for that, Rashab. I appreciate you sending me that. So I don't want to be teaching that as a logical thing if that's not what Michael's done. I'm just kind of playing with that myself. Morning, Lauriston. How you doing, buddy? Your long bias on these hearts always get in my way here. Long bias still. Yes. We want this to form a fair value gap here. We want this to be a real small range day. I talk for everybody, hey? No. For me, I want this to be a small candle, come back in and settle in on this day, and then we open up, dip into this fair value gap, and then continue up. So for today, I'd like to see a little bit of a retracement into Tuesday's low, and then continue up higher. Unless we get a huge run back into these old highs, which I wouldn't want to see. I'd like to see that create a gap. I'm just thinking of another possibility here on price legs. I'll see how the week turns out. I've got an idea for a price leg and predicting a higher run, and I'm just guessing, obviously, but we'll see how accurate the next prediction is. Let's get back into the 1 minute here. There's the return to the, that's what we're talking about. It's a return to the fair value gap bottom, and then a continuation down. Downside objective is here. I just want that objective to get hit. We'll see where it sits. Again, I'm in a discount here. I'm just playing it off this order block now. We've come back into it. The body, I don't want to see it really get above here, even though we could return into here. Again, I'm in a discount range, so I just like the fact that we return to the base of the 5 of the daily there. Run out the lows. You should take a portion off there. I can't take off any more than 1, so I'm just going to try and run it to my objective, but I would take a portion out here, portion out here, pay the trader on the way down. Now again, do y'all remember why I had this as my objective down here? Do you remember how I got that level? I got that level when I took this range here, the leg that took out the high. That's that leg right there. I took that, I extended it with my fib tool to 2.5. Could run lower, but that's my and there's the 50% that we're talking about, that price leg. That would have been the perfect entry. I was calling that earlier this morning. There's your perfect entry, and that right there would be a 53 to 27. That would be 73, 80 handles or so from there to there. Now again, I can manage this from the back end or the front end. And the back end, I just pull my stop loss to break even, just because I don't want to see it return to that order block there. This breaker here now becomes a valid one for me in terms of you'd put the stop loss just above the breaker's high. And we're sitting at what? We still got 10 more minutes, so I'm going to let this one ride a little bit, see if we can't get down to 3. And the stop loss I'll put at a zero stress game. That'll pay me back what I lost on the last trade. I shouldn't have my stop loss that tight. I'm counting on 3 PD arrays or more to kind of stop this thing. Small range, that low, that breaker's low, and the body before it comes into my stop. %'s here, 62%'s there. Back to the old low. I want to see these kind of hold price now. And come back to 50 is fine. Let's fill of that fair value gap there. Now let's pull the bodies and see what the bodies would do. 50% puts me right here. Just slightly above the last 50%. Now if it's got some urgency, that'll remain high there. And we just start taking off down. There's the body. Expecting that body to give us some strength now. I'll close that out if it's I'll take it out there. Run all the way up into the order block. want to see how this fair value gap fares now that we filled it. See how that holds price there. We just went from a small range here like this, and then you go into what is in an array that gave us a premium array. You have a breaker, fair value gap. Come into it, find some support at it. See it dip down below it. Get short off that breaker, It's a double breaker there. Now we're between these two here. And again, if you're looking up here at 52, you're about to hit 100 handles right here. That's 100 handles from the entry I gave you this morning off that 50%. Looking for that price leg down here, that'd be 120 handles or something. 125 handles. $17,417. 17417. You're down here for 3 handles, like a 3 standard deviations. We hit 140 subscribers. Wow. Thank you all for turning up. 140, man. I never thought I'd ever get 140 people. I'm humbled and I appreciate every single one of you. Thank you for subscribing and thank you for sharing your time with me today. And every day that you're in here with me, I really appreciate it. I really do. I was going to do some PDRA to PDRA trading, and we'll just do like a mass. Not that I recommend anybody doing this, but I want to do a day where I just trade array to array and just do like dozens of trades throughout the day, just trying to trade array to array and seeing how good it can either pay off or you can lose. And if you get on the wrong side of it real quick, how quickly you can lose and hopefully recover. It takes a tremendous amount of focus to look at 1 minute charts and look at every single array that you see and how quick and easy it is to miss it, especially ones that are back here out of the camera range, so to speak. You really have to watch your arrays very, very carefully. When you're on a 15-minute chart, you got a little bit more time to assess them and look at them and measure them. On the 1 minute chart, man, it really gets challenging to try and say, okay, we have a break below that candle that makes it's valid, and we retrace back into it, hit it perfectly, key off of it, and continue down. Premium, discount. So you always see me say I'm between this candle and this candle. Remember that if it's not a style that you appreciate or understand or even want to find any validity in it, that's fine by me. I'm not offended at all. But I'm trying to look at every single candle and how it functions so I can get I get better at my higher time frame candles, because again, this is all fractal. Everything Michael has taught us on the lower time frame is exactly what you'll see on the higher time frame stuff. So my concern now is I want to make sure this candle doesn't yeah, there we go. I want to see it get eaten through. When you get a candle above it and a body above it, you start getting concerned that this might be retracing all the way back up into that little range right there. Normally you pay yourself at a rejection block or a low, whatever your idea is. I like rejection blocks just because they a lot of times you'll hit them like this. We're hitting it over and over again and we're not taking out the low, so this could reverse all the way back up here now and you've missed an opportunity to pay yourself. I've only got one lot on, so I don't want to see this candles now. It becomes mitigation though. And we know how we feel about mitigation blocks. They are not as strong as breakers. And that's not a breaker because it has not broken this low here. I'm going to start working on that bot again that does the there's a bot that I have developed that trades these silver bullets, and I need to tweak it a bit more, but I'll start showing that on here again. Unfortunately, it works on an MT5 platform and not on here. I'm kicking myself now because I'm looking at the Dow Jones thinking I was watching it going, I should put an entry in right now because it's going short. Look at this Dow. I was thinking right up here like, oh, I think I would like to put an entry in here. And that's already dropped quite a lot already. Anyway, we're still over here. Again, my rule for rejection blocks, constant reinforcement for me when I see this happening. I haven't got the patience to stay in long, crappy, choppy stuff. It's where my mind starts to really second guess me. So from a psychology perspective, I start getting into my head here instead of trusting the arrays. I get in my head and go, oh, you could be wrong here. Because if you analyze it every minute, you're looking for specific arrays. And I say, all right, now I want that mean threshold there. I don't want that to lose. And rejection block, no, that's not good. And then we got this guy up here. So in all likelihood, the reach is for here, which is all that profit is going to melt away, and you hope that that holds. Because if it doesn't, then you start to go into a drawdown, and here you look back at this and go, damn, I could have made my money right there, right? So now you're kind of hoping that that order block holds, and it's a mitigation block, so you know it's not a strong one. So I don't put a lot of faith in it right now. And if you go through 3 PD arrays in a row, like Michael says, your ass is next. So there's 1, 2, 3, get out. Take your 50 bucks. We got 55 bucks. See? 3 in a row. That would have taken us out. Your ass is next. So let's go back and look at some of these telltale signs also of that. Let's look for a possibility of that happening on a lower time frame. So let's go to a 5-second chart here and look at what just happened here. So we have a low formed. We're looking for a break in structure right here. You have a break in structure to the upside. You trade back down into an old high, consolidate for a little bit, then you break up again above these highs, creating a fair value gap. Trade back into it here, run above these old highs. So now you're starting to find that there's, on the 5-second chart, we have confirmation that we're moving to a higher time or a higher range. So from that big range there, look, pull the high to the low and say, what logical level could this be reaching for? So you have to add the next PD arrays each time we extend a new high. You pull your fib tool back to the next one and the next one. So there's 75% retracement of that range right there. Then all of a sudden we get a pullback again. And again, I'm looking for those. You pull this up nice and wide. You're looking for these inversion fair value gaps to provide support or not. So we have a high that's taken out with that price leg. We're looking for a return into 50% of that leg right there. This is the same thing I showed you this morning, but now on a 5-second chart. The leg that takes out the higher, we now break down below these lows. If we get a retracement back into 50% of this leg, right here, you get short, aiming for lows as you go. big consolidation, run back here. You find support off of this candle, which is a breaker because it runs below these lows here, or this low right here. Right there, inversion. You come back up. See the body right here? We trade through it. Right there. That's your inversion. And when you see a body trade through it, that would have been on a 5-second chart going, I'm on the wrong side still. That's still got more upside for me, because that's my rule. If I have a body that breaks that, then I'm out. Oh wait, that would have been fine to stay right there. I would have waited for that, and as soon as that one opened, I'd be like, damn, and closed, I'd be like, I'm on the wrong side. So you gotta get out. You're running for that high, running for these highs, this inversion fair value gap, or sorry, this fair value gap here. And you have a breaker inside a fair value gap. Get short. Aiming for lows. Or each low, each swing point that you come to, and you didn't quite get this one here yet. So that would have been the turning point right there for that one we looked at on the 1-minute chart. Okay, so there's the midpoint, mean threshold, traded above it. Little imbalance. Little imbalances along the way. This is now a fair value gap. Come back into it. Looking for higher prices. So that's how you quickly save yourself from getting taken out on your stop loss. 11 o'clock. So 11, look for here now. So this is the next little area I'm interested in, is the range that was created between 9:30 and 10 or 11. So 9:30 and 10, and then 11's the retracement. 11's the candle to return. So that would be, we get back into here. That's a silver bullet on the 11 o'clock hour to go long. If I get a run back into here, I'll take this long with a stop loss sitting down here. I may not get it though. And I'm looking for 50% retracement. And maybe I may have missed it already right there 4 minutes ago. Good morning from rainy San Diego. You guys are up so early. Yeah, I know, when you're in California, you got to add a few more hours to your day, hey? You have to get up a little earlier. I remember getting up at 6 o'clock thinking, oh, 6 o'clock's actually like London Open out here. I could get up at 6 o'clock, have a coffee, run it around a little bit first. But no, like, you have to get up at 5 o'clock out there if you want to be like an hour early. So I hope you had a safe trip out there, Derek, and all the best to you, your son. So this is still an objective for me today. I'd just like to see a retracement back into here, into this guy here. 50% would be nice, but all I really care about is these lows here. You run out those highs into that fair value gap. If we get into this guy, beautiful. That would be a nice little breaker inside of a fair gap to get short, aiming for our objective down here. So usually you get this retracement that occurs. 10, 11. So that would be this another little silver bullet at 11 o'clock. Every hour you can find one of these things, or the potential is that every hour you can find one. So from that entry I gave you this morning there to here is over 100 handles. So even if you said, oh, this looks like a potential retracement, silver bullet entry for a long, close that one out up there, you'd be closing that out at almost, I think this was 57 here, 51. 51 was right there. So there's 100 handles from there to there. You'd be just under 100 handles. And then go long. Now you're up on 100 handles because you just made 20 right there. I just missed that. I was waiting for it to come back in here. I was too busy babbling somewhere else. I missed this opportunity here. But that's okay, because we got millions of opportunities this summer. This year is going to be a great year. Lots of craziness going to happen. I'd like for Michael to have been in here this morning to ask him that question of if that would have been a valid way to project into the future. The future of uncertainty. Because when you think about it, the algo knows where it's going. The algo has its data point, it's set, right? And if we look at potential swing projections like legs, I kind of do legs like this. And, you know, sometimes I'm right, sometimes I'm wrong. Projection block. Trip was good. Had full rows to ourselves. Oh, nice. It's nice when you get a nice empty plane. I have to pay the extra $5 or the extra, not $5, extra $50 for the place for some more leg room. I fidget around a lot because of my back. I fidget around, and I always take an aisle seat, so I always get the bags in the head when people walk by, and I get the trolley in the shoulder. I get the waitress or the stewardess come by and knock my shoulder. People walking by to go to the bathroom knock my shoulder because my shoulders hang out past the seats. So, or my arms hang out past the seats. But I rather prefer to have a seat the aisle. I used to like the window aisle, but I'm not a big fan of that sometimes. I like being hemmed in there. I'm a classic guy where if I go to a restaurant, my wife has to sit. I have to sit with my back to a wall, and I have to be looking at the door. Because I have an inherent distrust for people. So I tend to watch that door like a hawk, and I scan the room all the time, looking for something to kick off. Kind of hard to enjoy your dinner sometimes, but look at these old lows here, old highs here as a level of support. Order block. mean threshold. See that? I love it when it does that. Just comes down and touches it. You think, oh no, it's going for sure. Nope. It just touches that mean threshold. You react off of it. You thought you were the only one guarding your wife as ferociously as I do. It just comes from a career of seeing a lot of crappy stuff that people do to each other. And just always, and I worked in a strip bar as a bartender in the 80s. I was working in a strip bar, but it was like a biker bar, so stuff used to kick off there all the time. Bikers used to come in and beat people up. 3 or 4 guys beating the crap out of a guy in the corner of the bar, and it was just a sleazy bar I worked in. Back when it was $7 an hour for minimum wage back then. But yeah, so you're always looking, you're making drinks and you're looking around the bar all the time, and the more drinks you sell, the more something's going to kick off. So you start to watch people, and you start to get really good at seeing when they're going to kick off, and you can quickly lock up your till, dive over the counter and jump in the fray, looking to help the bouncers chuck somebody out. I used to love jumping in the middle of the fray. Like, yeah, let's go, everyone. Now, forget it. So, almost done that price leg that I see anyway. So, rejection block. So, we'll see if that one finishes off there. And then you look for another one. So, I always look for these extensions, this first one up, and then a drawback, and that creates an extension or a swing point. And then when you see it break that high there, then you think, all right, so where's that, can that potentially run to? So, and then you look for the PD array that would support that theory of that run. And it can run to it, it can be run just above it, wick above it, or you can just get little tiny ones below. So I tend to go when it's in that last 25% of that range, then I think it's pretty much done its job. Make sure you get your stop loss tight, or you're drawing it up tight. Make sure you're protecting it. So for here, I would have a stop loss brought right up to this guy here, this mean threshold now, because you don't want to lose that. You want to see if that finishes off there. And again, what you're seeing here on the 1 minute is no different than what you'd see on a 1 hour, 2 hour chart, whatever. There you go. Right there, bang. And see how it hits it? You see it stop, and there's a reaction off of it. That tells me that that was a point in which the algorithm hit it, reacted to it, pulled back. Now, whether or not, if it runs through it, I don't care. The fact that it hit it, and I see a bit of a reaction. Now, if it just ran right through it, I go, oh, okay, that wasn't what it was looking for. It's just, I watch as soon as it hits these things and we get a kick off of it, I go, it's hit something, it's running back to another one on a lower time frame. But if that candle just kept running all the way through it and didn't even twitch on that, I go, that wasn't the price leg it was developing. Then I gotta go, rethink that. So when I watch this stuff, kind of like watching in a bar, that's my theme for the day, watching something kick off, that's what I watch for, is those little subtle changes in the candles. And maybe that's a bit stupid. I don't know. Some of you might look at it a bit ridiculous that somebody would obsess over every twitch in a candle. But that twitch represents to me, it's twitching off of it's hit a PD array and it's bouncing off of it. It's heading for a different one, even if it's on a lower time frame 1 second chart, right? Like we said right there, we put the crosshairs right on the mean threshold. It hit it. It was a full candle all the way down. So some of you might have thought, no, that's going to keep coming down, Darren. That's going to come down into a discount range. But you look at this old high sitting right here. There's a mean threshold. You go, yeah, that could be a valid place. And it literally left the crosshairs there. You saw it, hit it, and it instantly reacted off of it. And you go, oh, that tells me that has some, and the fact that it pulled back nice and quickly like that, You go, oh, it's not finished doing what it wants to do up higher. Now it's running out the highs. So price leg done. Mischief managed. How's that for a Harry Potter moment? So hopefully you get a bit of understanding of what I'm talking about there when I look at that stuff. Yeah, wife still gets mad at me. I suffer from anxiety really bad though. Oh, sorry to hear that, man. Hypnosis. Hypnosis is so good for that. I don't know how many people have dealt with anxiety and hypnosis, and you find out where the root cause is. It can be quite freeing for you. You got to find a good hypnotherapist though. I wouldn't trust it to just anybody. You find somebody who really knows and can explain what they're going to do in their procedure, not just go, I don't know, I'll hypnotize you and see if we can find the problem. Eric, I do the same. That I think it might be a typical male thing, right? Where we like to have our back to a wall. I don't like feeling people sneak up behind me. I like to see who's in the room and what's going on. And I bet we did a survey on everybody in here. You'd get most people say the same thing. Lauriston, do you do the same thing? I would imagine as a firefighter, your spider senses are always alert to what's going on. You have to be in a fire. You're in the total darkness and you're listening. You're looking at the smoke. You're feeling the heat in your body. You're listening to the sounds of the wood, the creaking, the popping of the wood, everything when you're in there. So there is that silver bullet I mentioned earlier. We're waiting for it to get back into it. Didn't get it. We're looking for there's another potential entry. That would have been an entry, but again, I'm not super crazy of taking trades. I want to do a day, like I said, I want to do a day where I just go PD array to PD array, PD array, and just trade the snot out of it, for shits and giggles. See how well this stuff works as an array, do an array complex trade. But that's the silver bullet for 11 o'clock. And we're looking for 50% of the range right there. We're already up to and closing in this one here. We've hit these lows already. What's good? We're starting to chew into those. I like this 50% range. Usually you'll get a retracement between 9 and 10. And if you haven't, then you'll usually get it between 11 and 12. Okay, we're right back to the top of that fair value gap. See how it's reacted off of it? And there's a little doji candle right there. Old high right here. It's also this order block. We also have that daily fair value gap. See how we're kicking off of that again. It becomes an area sensitivity. Now I want to see this get eaten through. And then we look for this level and this level for inversions to finish off the rest of our potential run lower. Lori, are you still long on this idea? Here's the return to the highs. This may have been all we needed. Back to the breaker, 2 candle breaker. That's a 2-minute breaker right there. I didn't realize it till I just looked at it now. We're looking for 50%, but that's a 2-minute breaker right there. We've hit it perfectly, and now we're getting a reaction off of it. So do we dig into 3? One, two, three, midpoint there, right on 50. Again, if you're hearing any pauses in your sound, it's not your sound at all. It's me clearing my throat. So I just kind of hit pause on the on the audio, so you don't have to hear me making those god awful sounds. I listened to one of my shows the other day. I was like, oh my god, that sounds terrible. These poor people have to listen to me. And the mic was way too close. So you had me practically yelling in your ear at times. So I'll return to that little doji handle again. Right there. There's like a mean threshold in there somewhere. See how it's bopping off of it? Now you pull this a little higher. There's your rejection block. Now are we going to drive down? We got wicks going all over the place right now, so wait for something significant to happen. This is your inversion. Now that we filled the fair value gap there, it's done. We come below it, come back into it, find some support at it, or we're going to just work it harder. Look at 50% of that wick. Do we close above 50% of this wick? A lot of wicks going on. What time is it? 31. Oh yeah, the 6-minute shenanigans. My comment was about your trading and how you notice the small things that candles do. Oh, it was about that, not about whether or not you blocked the door. Okay. Looking at the small things. Look for those little subtle bumps off of arrays. So keep your eye on that 50%. I'll just put the hairs over here on the side. See, when you start to drive through it, I go, okay, so next 25 seconds, we'll see if that closes above it, and then we start looking for our 50% again. See if that goes out there one more time, close above. 3, 2, 1, there you go. Ah! You literally slammed down and stopped right on the 50. Tell me that's not important, guys. Tell me you don't see that. Like, it literally looked like, okay, it's going to close above. Bam! It literally locked itself right out on that 50%. So we wait and see. Interesting little twitches, eh? Every little detail matters. When you study price action super intensely, no, that doesn't mean I'm better, I'm great, or anything like that. It's just some obsession I have over reading charts It's no different than reading an ECG. I want to look for the subtleties. You look for these things called hemi blocks, little tiny blocks occurring in blood vessels that are not the main ones that feed your heart. You can see that inside an ECG strip because you look for these real subtle changes in your ECG findings, and you can find damage that is occurring in the heart before it actually becomes permanent. So anyway, that's how I liken it to this kind of stuff, or to that, is by looking for these little subtle changes. Does this make sense to you guys? Does it follow anything that seems logical to you? Or am I just kind of being a bit eccentric here? Hold high, tag it again. Now do we get a body close above it? So we got 75% has been chewed through. It's got to close above there sometime. Makes sense to you? Okay, good. Now you've broken out the high. Now I'm looking for this to close above here. You want this to become inversion now. And we'll just stick it here as a 1 minute. It's an inversion now. Looking for here. Watch the 50% or the consequent encroachment. There's a little tiny imbalance down there around 25%. You see it reaching for it now, right there. Working both sides of it now. See where the, now you gotta see where the body ends up in the next 2 seconds. See how we close right on it, open on it, and head down. So we worked all the way through it, ran out the high, and closed above the rule above. I'd be out if I was going to go short on that. And then you see a body closed at or just below that inversion on this side. Let's put that on there. So you see it did close just below it, then popped right back in, touched it, and left. Inversions, they become interesting. Now, how do you play off of them? I would have got off if I was going to go short. I was going to go, if you're going to go long on that, you'd want that to close inside or above your entry point. And see how the wicks and the bodies are right at or below that opening right there. See how the bodies are slightly below it? I like a little bit more body there, but you know, you can say that's below it, so the rule is stay out. It came back into my point. If I was long, you go, oops, now I've got to get out. And there's your opportunity to get out at a break even or a slight loss here. If you saw the body close below it, you go, I got to get out. So as soon as it trades back to my candle, I'll take the loss from here to here. versus waiting for your stop loss to get taken out. Again, just my rule. So now are we heading for, I didn't see that. See this here? Cut across, cut across, cut across. What's this right here? Let's pull this down. Is this a breaker? Nope. Mitigation block. See that? Does not break an old high. Mitigation. Come back inside mitigation. Bodies of the candles respect it. But we also come back into breaker, mitigation. I'll take my faith on a breaker than I will on a mitigation block. So again, look at your range that you're in. If you're going from here to here. What PD array supports a price that we could reach for? Well, we've got this PD array here. We also have this breaker right here. So you got to think 1, 2, 3 areas of 3 PD arrays on a 2-minute breaker. If you're looking for just the 1-minute breaker right there, that guy, then you'd expect prices to come up a little higher. Pull your fib tool from range high to range low. That's I took it from the ultimate high low. Now let's pull down further and see what we would have got. And we pulled our fib from here to here. You'd have a 50% range right there. If we were to pull it from this one here, we would have had 62% right on the money. If we would have pulled it from here, we would have had 75% on the money. Again, wicks, not bodies. So again, I explained this earlier and I didn't do it. I gotta practice what I preach. One swing point to the next one. So if we break the 88% of that range, then you reach for the next one, then reach for the next one. So ideally we should have just did this one first, then that one, instead of that big whole range. I was looking at the 9 o'clock or the 9:30 range, high-low. So now we've got this, again, a little structure break here. I want to see that run right up into here or here to short for that remaining low, for these lows here. Right. I'll get short right there. There's your inversion. Get short right there. I'll take one there as well. Oops. Oh, I didn't take one there. I should have just... Ah, well, I didn't do it. Stop loss is going to go... Kind of a dodgy one, really. I don't want it to lose that eye, so we'll keep it relatively tight. I don't want to trade through this inversion again now. So my eye goes here. And that mean threshold. Oh, I guess it's a smaller version of what we did this morning. Mean threshold is likely to get hit. So if I'm wrong here, look for the next. This could be another huge price leg up. So when Lauriston was looking for a long, this price leg here. If we break this mean threshold and this high, then look for this to be a new price leg up higher. That's where I'd be thinking if I'm wrong here. So everything kind of hinges for me inside here, if that makes any sense to you guys. Oh, Lauriston short now. Okay. Let's do it, Lauriston. Let's get long. Let's get short, buddy. Yeehaw. You want to see this mean threshold? Yes, like that. So you get lost. Lovely, lovely, lovely. Also, this is, it's small in here, but you'll see a consolidation. So again, the rule under one of my things is if they get 50% of the consolidation, 50% of the consolidation, you get one here, 50% of the consolidation, and 50% of the leg. 50% of the leg is your line in the sand you want to get short on, which is the one we talked about this morning, way up here, that one there. For that long run down, this is the same kind of principle, consolidation, leg that takes out the highs, and 50% of that could be all the way back into the mean threshold of that candle, or the consequent encroachment of that candle. This is one of those classic rejection block opportunities. If you only got one handle on, you've missed out on an opportunity to get some pay the trader here. Again, these are super snipe scenarios. These are not long haul scenarios. They're just super snipers. There's like, we got in here, you got out there, that's 11 handles, 10 handles. No, 9. Where were we at there? 91. So 7 handles. Same rule applies. I'm looking for this to hold price. I'm looking for this inversion to hold price, and so far it is. Good morning, Alex. How are you? Are you just getting up now? That 1 minute fair value gap is also a 3 and 5 minute as well. Aha! Lovely then. Let's run the highs out here. Nothing significant for me in terms of when I'm really picky about what it is I'm looking at. I don't see anything other than just running out the highs. It did not react off of this body at all. But let me just see something here. I gotta make sure what I'm looking at is right there to right there. Oops. Nope. That was just simply running out highs. Price imbalance. Another imbalance here. This is where it gets really choppy. there's the reaction we're expecting off of the consequent encroachment. We said we could allow it to come all the way back up to there, and it did. And we're getting a reaction off it. I like seeing these reactions, so now I don't want to see it go above that again. Though I suppose the worst case scenario is 50% of that. So getting up into 75% of that inversion is a line in the sand for me. And I don't like all this stuff. Too much chop. We're coming up for lunch hour too now. So you could take out that high before taking out that low in lunch hour. Get back up into that 50% of that range we talked about. So I might just close this out. If it doesn't start doing something soon. Yeah, I'm getting out of there. I hate waffling around. Too much waffling for me. This is when anybody who's in it finally gets to make their money, because I just got out. See how it's holding right up on that inversion again? Literally opened up on it. Have to go. Have a great rest of your day. Thanks. No worries, Sammy. All the best, my friend. Have a great day. We'll see you tomorrow. If you pop on by, we'll be here. Came all the way back to this candle here now. And see how it's chipping into it, chipping, and it's right off the bottom of the daily fair value gap. See how it's been really playing an important role of banging around off of it. So are we just pushing for 50% of that range that we looked at earlier? And we're looking for this inversion to let go. The fact that we revisited it and did get a reaction off of it means I'm done. You've had multiple attempts at leaving this inversion and it's not doing it, so better to be safe than sorry. If you take a little loss, 50 bucks, 70 bucks, whatever it was we just took there, then move to the sidelines and wait for a better, cleaner, more opportunistic time to get in. That little imbalance we talked about here. Through that mean threshold. Order block. One, two, three. Through 3 PD arrays at one time. Will be here at the close? Or will I be here at the close? The close of the day? Probably not. No. I'll be here for the morning and probably the afternoon as well. Just want to see where it kind of winds up for the day. Dow Jones is still kind of making a slow smart money reversal, low risk sell, accumulation distribution, back to here. This could be a place to get short. This one looks a little cleaner right now. See that? Market maker buy profile, smart money reversal, right back up into that price leg. The bottom, 50%, hit the bottom of it, inside of order block, return to consolidation. Nice. Take that range, premium, discount, retracement, 62%. Beautiful retracement right there. If you decide to take the bodies like our discussion was this morning, still would have given you 62%. Nothing extra. If it was just body versus wick, you wouldn't have got 62%. As you've gone wick to wick, you would. So pros and cons for each one, right? I guess you know, when you're talking about body to body or wick to body or wick to wick, I'm just familiar with. I know what Michael was very adamant about teaching body to body. Wick to wicks worked quite well for me. Your retracement gets short, aiming for lows. You got equal lows, relative equal lows down here. We come down into rejection, so you don't get those equal lows yet. You do get the rejection. So if you've scaled out a portion here, return to premium array again, our breaker, return to it. You get short there for relative quadruple or triple lows here now. You finally take them out. You come back inside breaker, you know, that 3-minute breaker right there. Come back up inside it, or you look at the premium discount. %. That's one of those ones where you can't pull bodies though. You never made 50% that way. You can see some validity to my wick to wick thing idea, right? Well, not my wick to wick, but that's why I like to do wicks to wicks. Sometimes your wick's so long that you can't use the body to get a valid entry. Anyway, if you're aiming for this fair value gap here and a body breaks below it, which we do, there's more downside potential there. So you wait for a retracement. You can go all the way back up inside this fair value gap. Now that becomes inversion, right? So look where we have here, and you got to say to there. We have a body break below it. You can retrace all the way back into it. We got to the mean threshold. Sorry, consequent encroachment. Hit the bottom of it. Consequent encroachment, went through it. Back to the consequent encroachment, through that, 75% of it. Or we could return all the way up into there. It overlaps this fair value gap here. So that's a perfectly feasible place that it could return to fill that in. It doesn't, but it could. So you have to be prepared to endure a retracement all the way back up into the high of that. Your stop loss would be up here. So if you're getting in short here, right off of here, then you got to think that's a massive one now for your inversion. You might want to say, I'm going to cut my risk by waiting for it to come back into the midpoint, or I'll wait all the way through to the high. If I don't get the high, then I'm not taking it in terms of the run back, or you look at the range that you got there and say, I want at least a premium of that range, which would be in the inversion fair value gap if we get a return back into it. So whatever your logic is for getting in, that's what you'd use. Breaker. How's our NASDAQ doing? Oh, it's finally going up there now. Good reason to get out. And we did. Now is that heading back up to that 50% we're talking about, inside that fair value gap? I think the 50% was in there, was it not? Of the larger range that I chose earlier. %. No, that's the breaker too. Breaker inside of fair value gap. That would be a nice little sell. Ah, shit, I missed it here. Let me get back into this order block. We've traded to this breaker, fair value gap. Now we've got this leg down here, breaker. Trade through it, come back to it. Potentially more upside, so I can argue both sides of this right now, so I'll stay out. If you can argue both sides, stay out. I do like this if we got a lower objective, which was that 2.5 of the price leg that took out London's high this morning. So I'm stuck between here, here, and here. I want to see it now. Close below here, come back in and find support at it, and then get short here. Unless we come in and revisit here, then you're looking at 62%. A quick wick up in here would be fine, not a body. Now you're going into lunch hour. So we returned back to the order block, come down, break the low here, come back into this order block, eat through here now. Gotta get through that candle though. Close below this, and then you're looking for these lows for lunch. And this might be some area we come back to during lunch or after lunch before continuing down. Or is this a continuation to the upside? I've got to the point now I have to really think carefully about not marrying an idea of, yeah, it's absolutely going to go down. I keep trying to force the idea that we're going to go to my, like I'm trying to force this objective of 2.5 handles or 2.5 standard deviations. And you got to be aware that you may be completely changing direction here. We have swing low, high, come back into the body. Look at this consolidation here now. If I lose 50% of that consolidation. There's 62. Sorry, not 62, 50 right there. Where do we close? Just below it. Okay, so we're going to go for the lows. So that was our objective that we called earlier today, the 50%. Hit nicely, and we're getting the reaction off of it that we called for a long time ago. So that's 50% of the range that was created from the morning session. And now we're going into lunch, right? So when it was just retracement, now we're expecting this to continue down. That's the objective down there still. We get a return back into here. Get short there. Notice when we're talking about this order block, it returned to it. We could have got short there off the 50. If you miss the 50, you see we saw this one, like, damn it, we missed it. If it returned back to here, you can get in short there. And then we said, well, if it gets below here and inverts, you come back, find some support at this, you can continue down. There's another entry there. You didn't get that, you might find something there on a 5-second chart. Yeah, there's the body. You break down below it, come back to it. Look at that, the body's respecting it, and then you're short there on a 5-second chart. So you will find it if that's your specific setup that you're looking at, like we were talking about, and you're expecting it to do that. As soon as it broke through that, go down to the lower time frames and say, if I got something that supports a return to that price. And we're aiming for lower now. Derek's 2.5 projection. See you later, Laurie. Have a good day, man. I'm looking for in here now. I want a discount or premium if I'm going to go short. I want this breaker, which is 50% of the consolidation, or if we do get a run all the way back up, the leg that takes out the high, same trade we did this morning, consolidation, leg that takes out the high, you want to come back into 50% of that. Or bottom of this, midpoint of this. So you've got 3 arrays, 1, 2, 3. And also the breaker if you want to play your breaker as well. Multiple different ways to enter this one short up here. We'll put a little we'll look right here and see these. If price doesn't come back up there, I'm not interested. This is the 50%. So what kind of reaction you get off of that one? I'll be right back. See that? I love seeing a reaction off of that level. Let's move this one out of there. That's the 50% range. 17,487. Is there anything else you guys want to look at specifically while we're waiting to see how this thing pans out? So any one of these arrays, if you decided to take them short, stop losses have to go up here, so they're quite long. So if you're really particular about how much leverage you want to put on, make sure your leverage corresponds with the distance between where you enter and your stop loss. There's another potential entry right there off of that inversion now. to close up here above this one now. This is an inversion. The moment we get above it, just keep your eye on that area right there. This is one of those 2022 models to get short off of. The fact that we did not trade above this inversion, just a fair value gap civvy, it closed on it, opened on it, and then we dipped below it here, entered on the return short. Could be wrong. That's why my stop loss is still way up there. I'm allowing this area. If we come up here, I'll put another lot on, another lot on right here for a short. And stop loss again will go above that high. I just don't want to see this order block lose now. Now we've got a body below it. We've come back, found support at it. I want to see that hold, and it's right on the edge of a daily fair value gap as well. So let's see if that continues to hold. And we're in the middle of bottom half of lunch hour too, so we could hit some shenanigans up to here. Matter of fact, this might be a chance to just get it 50 bucks. Yeah, whatever, leave it. I see it coming up here one more time. Let me see what the next 8 minutes has in store. Just put that right above there. Okay. There's a potential swing point there. Oh, that's what I'd rather see. Break this low here. With the body, I'll move to break even or move to just above the high. Order block. See, this is where you can nibble PD array to PD array. Array, mean threshold is holding. Rejection block again. Ran the highs. Back to the PD array. So if you just traded that, it'd be 160 bucks. One handle. Or one lot. Order block, validated, returned to order block, Now you want to see this one give way, mean threshold. There you go. So that gives way, rejection block. It's good. Just like that. Now I can move to stop loss too. That candle's high. I take a portion off here. If I had 2 lots on, I'd take a portion off there. If I could do a partial at the rejection. I'm going to move to a zero stress trade. I want this low to hold at fair value gap and come back inside that. I'm sitting right below that, or right on that little tiny one there inside that breaker. So if we do get a huge retracement all the way back, then I don't want this to turn into an inversion. That's why my stop loss is moving to break even. So again, my rule will be, if I see a body trade above this close, then I'll close this out. The wick can return to the low, but I want to see that hit it and then start kicking off of it. I don't want to see it start trading through it like that. Hit it. 12 seconds left. I don't want to see that, so I'll take $200 out of that. So I'll look for that area there, or return to the daily. Fair value gap low. It came right back to the breaker, right off the tip of it there. Precision reaction doesn't mean it's not going to continue up further. I just like to see that pop off there. And I want you guys to kind of see that stuff. When you see a reaction, look at that next up close candle. That's the one I'm looking at. Do I get a reaction off that, or do I drive through 3 of them and then run for these highs here? So my rule is, do I drive through 3 of these, or do we just pop up here, react off of it, get another candle, and then trade off the next candle? I like this kind of stuff. So if I get one more little pop up into here, I'm alright with that. It's at 3 of them in a row. So we're really between this premium SIBI and this discount BISI. Also inversion. See how the body closed above it? That's why I got out right away. I saw it starting to run up. Like, no, that's the reaction I want. I don't want to see it run up again. So get out there. Now this could roll over and go all the way back down on me, and I would have gone fine. It doesn't. I don't care. That's my rule. I have to stick with the rule. Look at the range. That is an optimum trade entry from that range there to that range there. This looks like the premium array to aim for, though. Also that old daily fair value gap low, which is also in line with that, which is also in line with that. So for me, that's a short right there. Very small stop loss. peasy run that out one more time for that 50% leg. Still lunch hour. Let's wait. Let's see. Whew. So take this right here, and you'll see high to low retracement, 62%. So we got back into the premium range. We wanted to get up into here, the optimum trade entry, but you did get into a premium ray, and then we dropped all the way down to a discount array, which is right in here, order block and fair value gap, BISI. Now you're looking for this one from here to here. So you're looking for it to run all the way up to there now. And come back to here. Inside this one, body traded above it, come back inside it, right to the bottom of it. I want to see where that candle closes now. Oh, good. See it close below here. It didn't. See wicks do the damage, eh? Now, do you want to take all these premium arrays you're collecting up here and match them up with these guys up here? Or discount arrays, sorry. And pair them up here with these imbalance. The ones that haven't been hit yet, the breaker hasn't been hit. Well, it did, it got hit here, but it wasn't a breaker then, it was just an order block. This one here finally hit it on the bottom. Now I want to see the open. The SIBI get hit. Still inside that inversion. The wicks did some damage. Stop loss should be down here. And you want to see this kind of run up a little higher now to go to a premium array. We're just trading inside this hour here. We're just talking about it, not actually trading it. discount, premium, discount, premium, discount. This premium here to this discount here. Each one of these has their own premium discount range. Well, it's nice to see 9 of you still dedicated to watching the charts minute by minute, staring at the charts, watching price action. It's the only way you're going to learn it, is study it minute by minute. Stay in here, dig around at it. My hat's off to you folks that are still sticking around. Much respect for that. I know other people had other things to do, so I don't. No, it's not a case of lack of respect for those who left. If you got things to do, you got them to do. As you can see, it takes a lot of focus to stay. You can quite easily, for a few minutes, ignore the candles and say, okay, I'm tired of looking at candles now. And then you start to lose all the PD arrays that are being created. So you really have to, instead of rushing back in, then you have to be careful to get yourself refocused. One more time. It just does not want to give us that premium array yet. See how it's kind of banging off that 50%. Well, the Dow's got a really nice little equal lows sitting below it right now. Finally, it's going to give us some premium array here. Look here and here. Smack it. Look for this guy here. See how that just come down, smack the array. Little imbalance right there. It drives through. Look for the next one. It's just sitting right on it. Go through that one now. You see these consolidations, it just goes between one and the next. Has to extend to make a new set of arrays for you to play with. So we've got this one, rejection, then the 4 versions of the wick. There's the rejection, you got a hit off of it. So leaving that low, order block, body. Now it's got to make up its mind where it wants to go. It's got to extend down further into here, and then start using the midpoint, and then the rejection block on the upside, creating that little false trend line there. Watch 50% of that wick. for the short that we got in over here. I don't even remember what the hell that was now. The short we got in right in there. Oh yeah, okay, we're looking for 50% was one. There was a second one in here, then the third one's up there. Kirk. Sometimes I remember to breathe. Yeah. So I've extended the array down. Now you want to try and run above the highs now. So if you extend the low, extend the high. Start reaching for this PD array we've been asking for a while now. See what they're doing? They just ran out these little highs right here. Gonna come back into it again, create another fair value gap if maybe, then run a little higher, or just come back into that stupid range. They've just extended the high and the low now. Now you've got this PD array to play with, and whatever one it creates up here. Oh yeah, that's what we want to see. It push right up into that area. See that? Finally got it. Took a while to get there. But that range we called from down here for up here, this PD array here. See how the bodies of the candles are respecting that? You hold on that, you aim for the next one above. As soon as you get it, you're out. So from there, even if you took it right in the middle, the high of it, that's 80. 90, there's 10 handles right there, and you just finished off 12 handles right there. Done and done. You got an imbalance up here. That's sitting right in the middle of a threshold. So now you want to see if that premium SIBI turns into an inversion. So if we take out the high that we're expecting for 1 o'clock, take this high out. Keep in mind you got that little guy up there too. So my eyes go to this area right here. If we take that out at 12 o'clock, wait for a fair value gap, or be ballsy enough, I'm just going to jump in on it. As soon as I see a close candle off of that entry point there, then I'll take it short and we'll aim for our 2.5 again down here. And if you enjoy what we're doing on the daily, minute by minute candle, watching it, counting it, then hit your like button. Let me know what you guys think of what we're doing here. And if you don't, that's fine too. It's not for everybody. It takes a lot of focus to stare at these charts in 1 minute and look for every array off of each candle. So there's the imbalance we just mentioned. See how it reacts off of it nicely. If you're a new subscriber and you are a new person and you've just enjoyed what we're doing here, we're here every day. Kurt's here bright and early. I think Kurt's here before I am, but he's bright and early in the morning. And just hit subscribe, pop in, and we'll share our thoughts with you. I'll give you setups every day if I can see them. I'll give you price points, and you can decide whether or not you want to enter into them with a demo account. We don't trade live here. If we do, it's off screen and you don't see it. Yeah, so just hit your subscribe button and like. And I guess the ring the bell is whenever I post a video you can get reminded. And I usually like to give you a little idea of what we did inside that chart, if it's a minute by minute or some specific trades that I've taken or we've taken. And you get to see the logic behind what the trade was. And if you're here, you get to see the trades live. So we have a nice reaction off of that imbalance there. Back to a discount array. See that? Fair value gap, order block, breaker. We're going to get a reaction off of this. So we're going to come back up into this order block here. If we blow through this in 3 arrays in 1 candle, then you start looking for a low. But I don't want to see it quite take that out yet. I want to see the lunch hour, clean this high out, keep this one, take out the high created during lunch. They're saying if we get a retracement in the afternoon, it will seek the high or the low created in the lunch hour. And here's our lunch hour started right here. Oh, it starts up here. So I guess we could see that one get taken out. That's the line in the sand for me though. If we lose that on a close, I'll get out. For a short. And wait for this something to happen up here. Either this inversion to hold on the way back, or run the highs, inversion, continue down. Consolidate, run down. And don't forget, again, we don't want to marry the idea that I said 2.5, that's my objective for the day. If we don't get it, we got to be prepared to change our idea on the fly. So if we're getting feedback that tells us that we're on the wrong side of the market, then you got to be prepared to fold up camp and head in a different direction. ICT is streaming tomorrow. What time's he starting his streaming? I think we all might jump in on him there. So you just say, okay, well, I'm going to close up mine. If Michael's streaming, that's the guy we want to go to. He's the guy we want to see. See that? One candle, run through them all. Okay, that could be the run right there. That imbalance, that's all it needed. Big premium array, 75%. I don't think it's done there yet, but who knows? look at this over here. Consolidation. We got a new idea here now. Oh, he's got questions. He's live streaming on Tuesday, but it doesn't tell you what time. It says if you have questions, post them there. And then he'll answer them in the live stream on Tuesday. Yeah, he doesn't give a time when he's going to do it. Hey D, where did you get that info on ICT streaming? If you're part of his mentorship group, his private Telegram account, then you'll see it there. If you're not part of his Telegram account, you won't see it. You said 8:11? 8 to 11 tomorrow. Eight to 11. I'm looking on my thing here. I don't see where he says that. I don't see where he says that. No, I don't see where he says that. Oops. Oh yeah, we're looking for 50% in there, aren't we? He says it on his YouTube channel in the community tab. Oh, okay, perfect. That's where you'll find it. I don't go in his community tab on YouTube. I think that's for everybody else who isn't in on his mentorship page. Looks like we're just going to do this $100 at a time here. Order block. There's nothing above us except up there, so I want to see it get through here. Except there's inversion here now. I want to see it just exit right through this candle. Back into this breaker. That's good. Now you're looking over here. Again, rejection block. Peel off a piece here. I want to see it just pop right through that now and imbalance. See that? Nice little area of sensitivity. It's got to get below this candle here now, so we can validate it. Otherwise, we still only have these candles up here. Yeah, it sucks. I have no bullish order block in here to key off of yet. Except these guys up here. I want to see it push right through here now. Come on, we just need to close below here. That's all. Big body candle, get below there. I'm not going to dick around in here too much longer. I'll do it 50 bucks at a time, I guess. I have no bullish order block to key off of, so it's just literally coming up into this range, 50%, and then it keeps coming back down to these bearish candles. I haven't got a bullish candle I can key off of above me that I'm interested in. I don't want to key off of these ones up here because I want to get low. So if I don't have anything small in here, I can key off of to kind of watch, keep my eye on it. Like this guy here is now formed. So I want to see it go below it and then use it as a point to get some leverage. That's why I got out. Just because I look at this going, well, there's really nothing in here for me to work without working it all the way back up here, and I don't want it to go all the way back up there. So that's why I got out. So now we've got little order blocks here forming bullish ones. So if we start to get that closes, we have a small one there, and we have something I can key off of. I have another fair value gap formed here. So this could just run here and run all the way back up into a premium array again. And I don't want that. 5 seconds. Now we have overlapping arrays. And we haven't got below this one yet. We need to get below it. Otherwise we're just going to keep bouncing off of these lower arrays. There we go. We've just got a valid one now. But I like to see a body. I know I'm being picky, but I want to see a body get below here. And then we're back to this guy again. So we're really overlapping tight arrays here. So it's got to blow through here. There you go. Told you that's the time to stay in. As soon as I jump out, within a few minutes, it does what we want it to do. But that's okay. I'm okay with that. Now we got right. So this is the guy I'm looking at now. We have a nice big bold candle down below it. We have a run below these lows, so he becomes a breaker. So I want to see a small fair value gap form here, and then another run back up into this to get short. The stop loss will be here again. There's the fair value gap we wanted. And because it's really bitchy here, I want to get right up to the top. It's been sideways, so yes. 16, 17. Looking for that one. That was the 1 a.m. silver bullet for me. If it comes back up in there. So this was where we were aiming for earlier. We're finally getting into it now. That's my lunch hour 1 o'clock silver bullet if it comes back up in there. So if we see this fill here, that's a fill of it now. So you can see where my weakness is staying in charts, staying in things, you know, I'm calling them down here, calling for specific levels, and yet I chicken out. I shouldn't say chicken out. I leave soon, and the retracements are what? Because I watch every single minute, and I look for validation for each, and as soon as it invalidates, I get out. When it could be just simply retracing back into a premium array again on a higher leg. So I still have to refine some of those skills of staying in a little longer, because once again I missed out on that trade. I missed out on the one that was up here. I got in for down here because of this retracement. I got out of here because of this retracement. So picking the right direction. And eventually we're looking down here. So it'll be a shame to get down here. And we've been calling that all day. And we even had a perfect entry. Oops, way up there. Right there. Today. Like that was perfect. And if that's where we end up, despite all these retracements and stuff, that's 120 somewhat handles. So we're getting there. We're getting closer and closer to delivery. Exact delivery we're looking for. Okay, so now this is what I want right there. Just a fraction short of that breaker there. I should have had it sitting right there. I could have got in on that. I'll take it. It was too precise. See, I put that just a fraction above there. I would put it right on there. That would have been a perfect entry. And now we're above this guy. You gotta get through here now, mean threshold. I'm just gonna leave this now. See if I get really hammered on a big retracement. But that's the objective to aim for now. Equal lows, all that kind of stuff. So we're still staying on that mean threshold there. That's what I want to see. You don't want to see it closing on there. You want to see it push right through. No, good. I want to see it close below that. Okay, finally. Let's see if we finally reach our objective for today. And that'll be it for me. I think I'll be finally done. My brain is fried here trying to follow these arrays this intensely. I hope you guys have got something from it. I hope you see some value in it. You can see the intensity you have to kind of share with it in order to get that for sure. I run the lows there. It'd be a nice time to get out of there. But I'm just gonna hold this just because I have a trouble holding it sometimes, and I have this tendency to want to chicken out real quick. So that low would have been another scale out point. If it was like 5 handles or something, I would have taken out a portion there. And we'll see if we end up getting our objective for the day down here. I remember that was an objective we aimed for way up here, and this was the perfect entry. I'll keep repeating that because I have to keep saying that to myself over and over again. You got to trust your PDRAs. You got to trust what your levels and stuff. So and hopefully you can see that despite the fact that we are the leaves on the trees here. It's not just we're lost in the leaves because we're in the 1 minute chart, but you can still trade and make some decent trades out of a market if you just watch how it breaks market structure for a different direction and then a return to a specific PD array. From a premium perspective, you can start you can still make money off of these 1 minute fractals, right? You got this order block here. I'm not moving this down anymore now. That's a zero stress trade, so 90 bucks, 90 bucks. We've been making $50 and $90 trades for most of the morning, so we should be up on the day. But that'll be our objective if we can kind of squeak that right to there. See, that's why you scale out portions. Turn to the breaker. Imbalance. See how we kick off as soon as we hit it? Baff! It reacts off of it. Now we're going to drive through. If it's 1, 2, 3, we drive through. I'm out. That's the rule. Good. We just come back to the edge of it. Now kick off of that and drive straight down. Now I don't want to see it come back up there again. If it does, I'm going to close that thing out. I want to see this really start pushing through here now. I suppose I'll just move my stop loss like this. Don't want to see a body close above that, right? That wick, that's going to come up for that guy there. Now I'm looking at the rejection block. I'm out. I think it's got a... If it comes back up into here, I might chop in one more time. Mean threshold. It's got to get below here now. Give back my profit. Body traded above it. Try to get in on that. Look at that as an inversion. It still may just do the damage of coming up into here and close below here. We'll watch and see. See that? Nope, that one closed above. Okay, I don't feel so bad now. Back to the order block. So even though we're in the trees, the reversal of the direction, we've run these lows out here. All those lows have been taken right now. So we can run back to a higher premium array. As soon as that, for me, as soon as that fair value gap there becomes inversion and we trade it above it, that's a reason to stay out. We're still in a potential bearish move here now that we've come back to that order block. Equal highs. Get one more opportunity to get in would be right there. And then I'm going to go have some breakfast because I've been here all morning, and there we go. So again, the rule breaks above. Body breaks above it. There's your hint that we're going longer. That order block's mean threshold. You want that to give way for a further upside. I want to see it get back into that little fair value gap sitting right there. So your brain gets tired and you start making mistakes. So if we just wick up into here, it's good. If we get a full body get through that, then hold up, because you might be experiencing a new break in structure to the upside. So if we get a body through here and through here, wait and see if this mean threshold gives way, because you don't want to get short on that. Don't aim for my objective down here yet. We'll see how. We're looking for it to get up in here. We're calling that back here. We want it to get back up into a premium array. That's the array that's up there. That's a drawn liquidity. Mean threshold. We just broke that high right there. That mean threshold is just above that high there. That's all it takes. And it's also right on the breaker again. So it's either one of those gamble and go short from here, or wait and see what this happens to this candle here. There's another entry right there. See that right on the body, right on the top? The wick found it. Now I want to see that close below it, come back up, tag it one time, and get out of there. And that'll be our last trade of the day. Let's see where this one ends up. Okay. See, I say I'm going to do it and I don't do it. When it gets back here, I'll get short there again. Second guessing myself. So when your brain gets so tired, you second guess yourself. So something to put in your journal entry for your psychological part. That's what I'm dealing with right now, is my brain is kind of second guessing myself for ups and downs, and I want to marry that thing, and I'm starting to second doubt myself. And so anyway, don't take any of my trades as valid right now. So that one's a look. You're looking here from there. If we get back into that order block, stop loss goes there. Right there. Oops, a little too early. We'll put it right above the threshold there. That'll be the rejection block. That'll be way up there. I don't want to see that high give way. Touch the inversion, yes. Where are you going to close? I want something I can scale out now. Okay. You'll scale out at the bottom of that, and then I'll do one at the bottom. Just wanted one to scale out, just so I can say I actually scaled out something. I don't want to see that mean threshold go. I suppose we can come back and tag that inversion again, but I don't want to see that. So it does what I don't want it to see. See the wicks do all the little poking around in there, and it's the bodies we want to look at. As soon as I saw that body get above there, I was hoping I could get it on the way back down and cut some of my loss. like that, but stop was too close. Well, there you go. I gave back a big chunk there. I think that pretty much gave all the profits I made today back. That is what it is. We have a swing low. Interim swing low is formed now. We have a body breaking above here. So look for getting on side now for a turn up. That wasn't quite the objective we were going to get. Watch a little shit come all the way down there now. All right, folks, that's it for me. We're coming up to 2 o'clock. You got a few more minutes. Look for you're in the middle of this range here now, so some support off of this and start moving up. There's this one down here too. Yep, that'll be it for me, folks. It's been fun. Thanks for popping in. 12 of you sticking around still. I appreciate that. Appreciate all of you. Thank you so much for all you new subscribers. Thank you so much for popping in. And I will see you bright and early tomorrow. Keep in mind, this still may be an objective for the day. But it looks like we've got a short interim low forming here. You want to see a body get above this candle here. We have got a little break in market structure here to the upside. We have a fair value gap that supports structure to the upside. So don't marry the idea that it's coming down here when you've got a swing that's formed here on the 1 minute and you've so far got confirmation for more upside. There's support right there for further upside. Okay. See how that works so beautifully? So if we're on the wrong side, it shows you on the wrong side, comes back, gives you an opportunity to get in, see if we're long. So you're looking for either a run up here, take these highs out, and look for a continuation on support. So you want this order block here now to provide a level of support, and start looking for ways for this to turn into that stepping stone run for these old highs and that breaker. First of all, lose the breaker and then look for the highs. But other than that, I will see you guys tomorrow. Thanks so much for tuning in, and I hope you got to learn something. Hope you got to enjoy some trades and see how it works. Till then, see you tomorrow.